Good morning and welcome to another exciting Engage podcast recording. Today we're going to focus on VAT and VAT in local government very specifically. The hows, the whys and the often why nots. We're joined by Mr. Mornay Schafer, who is a very, very capable VAT practitioner. Spent more than 18 years at PwC, 8 years at SARS. He really knows his way around VAT and what we can expect or what we should be doing with regards to VAT in municipal environments. We're joined by Cornel Ebersohn. Cornel's responsible for our deployments from a project director's perspective on a national basis. And Cornel also give us some input, some practical input as to what we can do and what we should do with regards to VAT. Now, VAT in local government is not as straightforward as one would expect in the private sector. And I want to start off with Mornay. Maybe Mornay, if you could explain to us the challenges that municipalities face in apportioning input VAT when the operations involve both taxable and exempt services. I mean, how do they handle that? What should they be doing and what should they be looking out for? Thanks, Mornay.
Morning, and once again, thanks for inviting me. Yeah, as you've said, Philip, VAT within local government is very complex, and the main reason why it's complex is due to what you've mentioned, the fact that a municipality has taxable activities, it has exempt activities, and also zero-rated activities. Then there's a fourth one that a lot of people quite often misinterpret, and that is what SARS calls non-supplies. And because of the fact that you've got a combination of those different supplies, you need to understand what the VAT implication on the expense side is to determine the correct treatment of the VAT. So, the VAT can be, in Section 17 of the VAT Act states that you can claim your input VAT to the extent that you are making a taxable supply. And this is where this whole thing comes in on VAT apportionment. And SARS have issued a VAT ruling for local government, and not a lot of people are aware, but they've actually tweaked the formula, and that formula has changed in terms of the ruling, and what should be included, what should be excluded within that formula to then get to a percentage to determine what needs to be claimed when it comes to apportionment expenses. So when it comes to apportionment expenses, that is where the difficult part is. So you need to go and look at your different within mSCOA, the structure and how it's been set up, and certain departments, if I can call it the departments, like for instance electricity or water or sanitation, those are all taxable activities, standard rate, so there won't be any apportionment. But then you get your finance, your office of the CFO, for instance, where they are rendering a service combined, taxable and exempt, and there you need to then apply that apportion percentage. And the apportion percentage is only applicable if the formula that you've used gives you a result of more than 5% exempt. So if the percentage is less than 5%, then there's no need for apportionment. But if it's above 5%, then you need to do apportionment. And also, very importantly, when it comes to compliance, is in this new ruling, SARS have now stated that you have to submit your apportionment calculation going forward is going to be required to be submitted and uploaded on your e-filing profile. And they've referred in there to say that it must be done by September. Now, what SARS have not taken into account is that a municipality has a junior end. So you basically have 3 months to do that, which is very short period of time. So that is very important to consider. But coming back to the actual apportionment and where you apply it, that is where you need to go and look at specifically the different areas where you have the mixed use. For instance, your IT department, because they are dealing with, for instance, the traffic departments where your legislated fines are exempt from VAT, but the services in the water department is taxable. So therefore, the expenses incurred by the IT department would then have to be apportioned. And that's where it's important to make 100% sure that if you, especially looking at your budget, if you expense something and that can be expensed directly in a fully taxable cost center, then you rather expense it there because you're going to get the benefit of the full input VAT and no need to apply an apportionment to it.
Excellent, Mornay. Thank you very much. Cornel, from a practical implementation perspective, looking at it more from a systems perspective and taking cognizance of the impact of mSCOA on these areas, what are the challenges that you see we're facing on a day-to-day basis and the emerging risks and how we curtail those or how we manage those in a day-to-day operation?
If I can lock on to what Mornay has said, planning is the main thing, and I think part of the SARS ruling now is preempting this. This apportionment methodology was always post financial year end, etc., and are now a bit more proactive, it seems. And then what he said on the apportionment is planning and it's costing. The ICT example that I used was planning wise. How you're going to cost it out, what your methodology is of applying that costing, number of points in water, number of laptops, whatever. And that needs to be consistent and relates to your apportionment. You can't change, have 100 points suddenly, but you're costing it only 5 points in terms of secondary costing. So there's definitely a line that needs to be done and set up. And then furthermore, to what Mornay has said, is very importantly is the powers and functions in terms of Schedule 5B, 5A and 5B, what the municipality are their powers and functions and their core services. It's basically core and non-core, and something that you can always need to be very careful is claiming VAT or transacting in the VAT environment on non-core services. That's your libraries, etc. That is secondary or agency functions that you perform on provinces and national departments, etc.
Thank you, Cornel. Mornay, just moving on to, and drawing from your years of experience in this field, the role of internal control and getting your processes established well in advance. You've made a very good comment, and Cornel's now sort of also alluded to the fact that there is really no time with a June month end or a financial year end in June, and then having to submit your VAT detail by the end of September. It's a two-pronged question. So one is the importance of the controls, and then secondly is the operators in our space. We come across a lot of people that are offering municipalities excellent services at sometimes exorbitant fees. But what we found, and this is a discussion that we've had internally, is that if we had the proper procedures and processes and controls in place, one would eliminate the need to have an external consultant actually come and do the work for the municipality. Because that is it's not difficult, it's not complex, it just needs to be understood, and then you need to follow the procedures. Just your view on that.
Thanks, Philip, for that. Yeah, I do agree. First of all, internal control, very, very important. And I say that internal control starts with the lowest level. And where people quite often make the mistake and don't understand, that is a transaction-based tax. So you need to look at it at the lowest level. So therefore, linking on to what you're saying in putting in controls, systems and controls and procedures and everything, this is where it's important, because you need to if I start off with the roles of supply chain, for instance, having your supplier database, having that checked and making sure it's correct, i.e. the VAT numbers of the suppliers are correct, because then you reduce your risk. If your system is set up, I'm one of those firm believers. A system must work for you and not you for a system. So therefore, if the system is configured correctly and set up correctly, then I agree. It's not rocket science. Yes, you will always have the human factor, but the human factor will be very limited. So therefore, the system actually gives you the answers, and that final calculation is very quick, or should be very quick. So therefore, it's actually not, as you've said, rocket science. Where I also have on, if I may just go slightly into what you've said about the other consultants, what the municipalities don't often realize is that if any consultant, that includes myself, registered as a tax practitioner with the South African Institute for Tax Practitioners, if you're not registered with a recognized tax authority, you're not allowed to deal with SARS, first of all. Secondly, the organization that I'm affiliated to, as well as if you're affiliated to SAIPA or SAICA, their legislation does not allow you to do any work on an outcomes-based basis, therefore on a contingency basis. Okay, so SARS are very strict about it. They're very unhappy about it. National Treasury is unhappy about it. I've done a lot of work for Provincial Treasury in KZN, and their policy in KZN is no municipality is allowed to appoint a consultant on a contingency basis. So yes, it is an area that happens on a daily basis, but it's very, the guys are not compliant. And I myself actually gave evidence in a court case, in a high court case in Bloemfontein in 2013 and 2014. And this was one of the things that the judge asked me. And that's why there's the lack of knowledge, not only within local government, a lot of other industries as well, but you're not allowed to actually. It's against legislation. So yeah, that's my view. But again, just to recap on the side of systems and procedures, if all the cogs in the wheel are turning in the same direction, then it's not rocket science.
Thank you very much, Mornay. I appreciate your input there. Cornel, just on this from a systems perspective and what we do with regards to the PhoenixERP system and the way that we've implemented our approach to that and the way the controls and the measures that we have in place as a default with regards to our deployments. Do you perhaps want to just elaborate on that for a few seconds and just give us some insight on a best practice from a systems perspective?
Philip, yes, Mornay mentioned that, and it's exactly what we do is at the supplier. As a rule, you can't charge VAT if you are not registered for VAT. That is the first and foremost trigger in our system that we use is whether there is a VAT number and it's valid. The tax certificates, we use the CSD, we use manual verifications during tender processes, VAT status are active and correct and legal. And then the second one is where we look at departmental activities. The department, is it electricity? Is it something else? Is it corporate services, traffic? Then by default, certain markers or system identification is done to trigger that. So if a person is not VAT, although it's a VATable vote or VAT excluded vote, he will not transact VAT in that particular case. If there's a VAT number and the vote is not claimable, then they'll the VAT inclusive amount is accounted for. But in saying that, it takes a review annually. New configurations are done every year. And as well, legislation. It's a lot like GRAP. You have to review what has happened in terms of VAT rulings in this case, and also new legislative requirements going forward.
Just a practical issue. Maybe, Cornel, if you can start and we can get Mornay to perhaps also weigh in on this fact that the legislative requirements with regard to compliance with tax is critical in doing business with local government. Now, that is income tax and it's VAT and all the other taxes that you have to comply with. What happens if we award a contract to a contractor that is VAT registered and is compliant at the time of award, and during the course of the process, he now is no longer VAT compliant? What are our, from a municipal perspective, how do we handle that? How do we address a situation like that? Is it business as usual because he was registered for that when we awarded? Or is it our responsibility to check throughout the process if he remains compliant before we make payments?
Philip, yes, there's a circular that came out. Initially, he was supposed to terminate or stop payment, but the circular came out that said, because at the time of award, all taxable or tax requirements were in place. So, yeah, in terms of that, obviously, when SARS gives you an order to pay over that money to SARS directly, they can do that. And then you have to do and perform exactly that. In terms of some of the other compliance issues, like on COIDA, which is for construction contracts, that contract then can be terminated, but that is, a different kind of tax and not VAT per se.
Okay, yeah. Mornay, just if you could follow on to that, because I'm more concerned with the fact that, VAT needs to be paid over. It's nobody's money, it's trust money. So you take the VAT and you pay that VAT to SARS. During the currency of the agreement, that money still goes to SARS, or how are we sure that the supplier conforms, and does that have any recourse on us as a municipal entity?
Yeah, Philip, on that point, there's a few things that needs to be looked at. I agree, and I'm aware of that circular, that if the tender is awarded and they comply, then you can go ahead, okay? And then pay over the invoices to the supplier when they submit those payments or invoices for payment. However, it should be noted that a tax clearance certificate, quite often people don't realize this, is that a tax clearance certificate says the following: the supplier is compliant, therefore all his tax returns are up to date and he's got no outstanding debt. However, the VAT number, quite often that's listed on that tax clearance certificate, doesn't necessarily mean if there's a VAT number, that VAT number is active. And this I quite often find across industries. So you still need to actually go and verify that that VAT number is active on SARS. And the same with your CSD. My experience with CSD is when it comes to VAT and the VAT numbers, they're actually not so up to date. The rest of the stuff, they're pretty on the ball, but as far as the VAT numbers is not 100%. Then the next step comes that once SARS picks up there's no returns coming in or there's outstanding debt, they immediately withdraw that tax clearance certificate and say they're not non-compliant. So my view and the discussions that I've had previously with National Treasury as well, it's quite a few years back, is that you can make payment if they are tax compliant. If they're not tax compliant, my view is then you can stop that payment. And I've got a number of clients where I've done work for local government where they actually have a system in place that if the payment is above a certain value, they physically go and do a third-party verification to ensure that they are still compliant. And if they're not compliant, then they've got a system in place to say to write a letter or email to the supplier and say, we noted that you're non-compliant. We're giving you 14 days to become compliant. And therefore, for that 14 days, we withhold your payment. So that is the proactive process that is followed. But it comes back to that whole thing of making sure that the guys are compliant. But I would like to just, Philip, take it one step further.
Sure.
When it comes to awarding of tenders, my experience within local government, and I've assisted a few, their bid adjudication, it is important when it comes to comparing apples with apples. When you have one supplier not registered for VAT, another supplier registered for VAT, now you have two tenders coming in. So on what do you actually base the adjudication? Because the one is going to be cheaper because there's no VAT. But my advice is you need to consider that this one now submitting is not registered for VAT. If that tender value is going to exceed R1 million, then you need to say, but hang on, I need to consider that once this guy registers for VAT, because he's going to have to register for VAT, then he actually needs to up his price with currently the 15%. And where are we then going to come out? Okay.
Right.
And then that leads me to the next, where certain ERP systems don't necessarily have the facility to monitor the spend per creditor. I have at some of my municipalities where I check the spend, I then say, but guys, this guy is very close to R1 million, or he's just exceeded R1 million, and he's not registered for that. Now, I often get the question, but what is my responsibility as a municipality? And I'm saying there's nothing specific in terms of municipal legislation or in terms of tax legislation. But we are in South Africa and a country with a lot of legislation. And this is where it comes in. In terms of the Criminal Procedure Act, it says if you are aiding and abetting anybody in committing an offense, you are just as guilty. Therefore, if you are paying someone and it exceeds R1 million, and you know that they are exceeding R1 million, it's an offense for that person not to register for that. Therefore, you are, as a municipality, aiding and abetting. So because we've done that once at a forensic investigation, and that is why I'm advising all my clients, monitor that and ensure that you notify. So we normally send out a letter to a supplier and say, listen here, we've noted that you've reached R1 million. The contract is not finished, and surely they'll have other clients, because you're not going to appoint or award 2-3 million rand tender to a brand new business. You're going to look at their history. So therefore, my advice is notify them, give them 21 days to go and register for VAT, and then bearing in mind that the price is going to increase potentially.
Thank you very much, Mornay. Cornel, with regards to spend reporting on VAT, do you want to maybe just a few words on the way that you handle it and the way that we see it? Just the system's perspective and the compliance, forcing the compliance is really actually where I'm at. And do we do it and how do we do it?
Yes, Philip, there is required reporting that's submitted to the OCPO, which is the Office of the Chief Procurement Officer at National Treasury, that we submit every transaction with the details, bank details, VAT numbers of all suppliers per month. System-wise, we accumulate constantly through a financial period. what the transactions are, or consolidated, summarized with every particular supplier that we are dealing.
We've come to the end of our very, very exciting conversation. But in closing, Mornay, I'd like to ask you, in your experience, what are the most effective strategies that you believe municipalities can put in place to ensure that their VAT matters are up to date? And then after you, I'm going to also just ask Cornel if you would maybe just give us an idea of some of the best practices that we can deploy and encourage within our installed base. Mornay, if you don't mind.
Yeah, thanks, Philip. Well, first of all, starting on the expense side, ensuring that the suppliers that you are looking at and that's on your database are compliant and are registered for VAT. And that's why we actually, back in 2009, I developed a program where I can do a bulk VAT number vetting to check the suppliers' VAT numbers that are currently on your system. So the creditors that's listed on the municipality system. So that definitely good practice to monitor that on a regular basis. And then when it comes to the income side, is to look at ensuring that the coding is done correctly when it comes to, because the municipality is on a receipt basis and declares VAT on the receipt. And then also, I use the wording, the pecking order of how the allocation happens, always first to your non-VATable items, your interest and all those type of stuff, and then to capital at the end of the day, because then at least you defer your VAT that is payable ultimately to SARS. So I think that is within legislation, you're allowed to do that, but I think looking at that, and then obviously ensuring that you've got your ducks in a row to do the VAT apportionment correct and accurately. And again, if all of that information is readily available, then it's so much easier and quicker to then apply and see if there's a major shift and change in what has been claimed as far as apportionment is concerned.
Excellent. Thank you, Mornay. Cornel?
Philip, yes. Firstly is we update our creditors that we are utilizing from the CSD. So that is the best practice. It's the first line of defense. If it's not a VAT number on the CSD, it's unlikely that it's going to have VAT before you even start looking at the activity or the status of the VAT vendor. And then secondly, Mornay mentioned that is the allocation of that, of where your cash inflow is going. That is stock standard in the system. It's advisable to do exactly as he said. That is protecting and it's legal, your cash inflow. And that is, and then regular review. Obviously by experts, can do it sometime once every 3 years by expert, etc. That is valid for 5 years. And make your corrections, whether it's over and under, is you need to get it correct. It will have an impact somewhere down the line.
Thank you very much, Cornel. And thank you very much for everybody that has joined us for this very informative podcast. We chose this topic because VAT is a problem. We've had a very, very interesting discussion about the ways that we should do it and not do it, and some of the strategies that we can deploy, some of the system perspectives that we can consider. But VAT is a problem, and we understand that. And if we could have aided this morning in just providing a bit of light in this environment, I think we've achieved what we wanted to, what we set out to do. I'd like to encourage you to please reach out to us. We've got people like Mornay and Cornel and a whole host of team of professionals that are really looking forward to assisting you in addressing the VAT issues and making sure that we stay compliant with SARS. Thank you very much, everyone. Have a fantastic day. For more information, please feel free to contact us on 0860 104 888, alternatively admin@be.co.za, or on any of our socials. We'd love to interact with you.